Let's go back to the U.S. stock markets now, because they ended the day higher, and so too did the tech-heavy Nasdaq Composite. In fact, with today's gains, the Nasdaq is now higher by 26% for the year. But are technology stocks nearing a bubble? Let's get some answers from Sarah Burton in New York. Sarah.
Hi there, Kathy. Tech stocks by far the best performer of the 10 industry groups that trade on the S&P 500. And if you look at the Nasdaq 100, which is a gauge of the largest non-financial companies in the Nasdaq stock market, that gain is about 33%, beating out the Nasdaq Composite by 7 percentage points. The problem with the Nasdaq 100, though, is that the degree to which gains are outpacing losses, known as a relative strength index, that's now sitting at about 76, as you can see on this chart. It got closer to about 77 earlier in the session, and guess what? That's the highest that we've seen it since the time of the tech bubble of 2000, or it was around the same level around the tech bubble. Now, 70 is usually the level at which people start to get nervous about an index or stock looking pricey. And even Peter Bookvar, he's equity strategist over at Miller Tabak, he was saying that in the very short term, it's dangerous, and the Nasdaq 100 could actually pull back. However, even he says that after we pull back, we could still take a leg higher. You know, we've gotten all these better than expected earnings from the likes of Intel, from IBM, from Apple. Even today, Motorola, it posted a narrower loss than analysts were looking for. That's why, even though we're up more than 55% from the 5-year low that we got, this was back in November, some analysts out there now saying that technology is still a good bet. Remember, we're still off about 66% from the record the Nasdaq hit in the year 2000. Of course, that was the time of the dot-com bubble. Back to you, Kathy.
Yeah, but Sarah, before you go, even without those good earnings, tech was still doing well, wasn't it?
Yeah, and you know, we've read a number of different analyst reports, and this is why they've done so well in this recessionary environment. They say it's a good defensive play and a good cyclical play. On the defensive side, you have to remember that tech has very little debt, and that's what hurt a lot of these companies in this recession. Little debt, lots of cash, and so they can weather a downturn. So even if stocks were supposed to take a leg lower, a lot of analysts out there saying, you know what, tech could still do all right. It's a good mid-cycle play because companies tend to look to technology to get rid of costs out of the system when business isn't good. And then a cyclical play as well, because businesses start upgrading their software and systems as the economy recovers. Now, we've started to see the economy, of course, start to stabilize. The Beige Book showing this week declines were not as bad as expected in certain sectors, in certain regions of the country as well. And one economist are saying, you know what, saying now that signs that the technology will actually help drive what we see with a recovery.
I do expect that one of the leading factors that will help drive an economic recovery will be a reinvestment in technology equipment, and the tech-producing industries should be among the first to recover. So if the Dallas Fed is beginning to see that, I think that's a really good sign.
So, Kathy, you have the fundamental news, which means that, you know, maybe technology could get better in the future. And also, I just want to point out the relative strength index that we were just talking about, because, again, it was at above 76 earlier on today, and it doesn't guarantee selling, though, is what various analysts have said. You know, this happened back in 2005. So Nasdaq went on to gain from those levels.
Great. Good to talk to you. Thanks for that, Sarah. Sarah Burton in New York.